Welcome back to Investing Talk Podcast. Today, we're tackling a question that's likely on many of your minds. Is now a good time to buy Astera Labs? For this discussion, we've gathered quite a stack of sources. We're looking at their latest Q2 2025 earnings, SEC filings, financial data from Bloomberg Terminal, Yahoo Finance, TradingView, plus analyst views and recent news. Our mission today is really to sift through all this, pull out the key insights, and help you understand what's really going on with Astera Labs. Before we get into the details, if you find our analysis helpful, please do remember to subscribe, like, and leave a comment. It honestly really helps us bring more of these discussions to you. And hey, if you're feeling generous, maybe consider buying us a coffee. Also, if there's a specific company you'd like us to look into, just leave a comment below after this introduction. We'll definitely add it to our list. Okay, let's unpack this. So to start, let's get a handle on what Astera Labs actually does and what its financial health looks like. It sounds like they're in a pretty hot area of technology.
Yeah, absolutely. What's fascinating here really is how Astera Labs has positioned itself. They specialize in these high-speed connectivity solutions. Think of them as absolutely central to cloud and AI infrastructure. So this places them right at the heart of this huge secular growth in data centers and, well, accelerated computing. And looking at their Q2 FY 2025 results, they reported revenue of $93.5 million.
Wow.
Which is, yeah, a really impressive 54% increase year over year.
54%.
Net income for the quarter was $18.2 million, and their gross margin stayed really robust at 71.4%. They also beat the consensus EPS estimates with $0.20 per share. And the forward guidance, they're projecting high teens revenue growth for the rest of FY 2025, mostly driven by, you guessed it, AI and data center demand.
That certainly sounds like a company with some serious momentum. But how strong is their balance sheet, really? You mentioned growth, but is the foundation solid?
Oh, it's incredibly solid.
Yeah.
If we connect this to their overall financial health, it's quite impressive.
Yeah.
As of June 30, 2025, Astera Labs reported, get this, $1.02 billion in cash and short-term investment.
$1 billion. Okay.
And zero long-term debt.
Zero.
Zero. It signals what many would call a fortress-like financial position. Really strong. Their free cash flow for the first half of 2025 was $48.6 million. That's up from $32.8 million in the prior period. So that shows improving operating leverage, meaning they're getting more efficient as they grow.
Right, scaling well.
Exactly. They also boast a current ratio exceeding 4.5x, and net cash per share is over $10. It's just a very healthy picture.
So they're well-funded, growing fast, growing efficiently. What about their competitive edge? I mean, who are they actually up against, and how do they manage to stand out?
Yeah, good question. Their advantage really lies in their proprietary connectivity ICs, the integrated circuits. And they have strong relationships with Tier 1 OEMs, the big hardware makers. Now, they do compete with big names, Marvell, Broadcom, NVIDIA even, especially on the DPU and networking front. But Astera Labs differentiates itself. They use a fabless model, meaning they design chips but don't manufacture them.
Ah, okay. Focus on the design.
Exactly. That lets them pour resources into R&D. They've had a sharp focus and a rapid innovation cycle. This allows for deep integration into the next-gen servers and AI clusters. That focus is really their key differentiator.
That's a very positive fundamental picture you're painting. Strong growth, solid finances, a clear niche. But as we always say, great companies don't always mean great stocks if the price is too high. And here's where it gets really interesting. Let's talk about how the market is actually valuing Astera Labs. What's the price tag?
Right. This raises that critical question. What are you actually paying for all that growth in that strong position? As of late August 2025, the stock is around $183. And their valuation multiples, they are, well, substantially above the semiconductor sector averages.
That was substantial.
Okay, so for example, their price-to-earnings ratio, the PE, is 87.5x. The sector average is around 34x.
87. Wow.
Yeah, and the price-to-sales ratio, PS, stands at 25.3x versus the sector's 8x. Price-to-book, PB, is 12.5x compared to the sector's 6x. So across the board, significant premiums.
Wow, those are significant premiums. That's quite something. What do the valuation models themselves suggest, like discounted cash flow, DCF?
Well, the consensus fair value estimates from DCF models, they tend to put the intrinsic value for Astera Labs somewhere around $110 to $125 per share.
Okay, so $125 versus the market price around $183, you said.
Exactly. So the stock is currently trading at a premium of, well, more than 100% relative to those sector averages, and significantly above those DCF estimates, too. This kind of premium, honestly, it's only justified if Astera Labs can sustain really outsized growth. We're talking potentially 30% plus annually over several years, not just a flash in the pan.
Right. So the market is pricing in near perfection for a long time.
Pretty much, yeah.
Okay, beyond the fundamentals and that demanding valuation, what's the market itself saying? Through its price action, the overall sentiment, how has Astrolab stock actually been behaving?
Well, since its IPO in early 2024, the stock has traded in a pretty volatile upward channel. It's been choppy. Just in the past 90 days, it's seen highs up around $195 and lows near $130, so quite a range. As of late August, like I said, it's trading in that $175, $190 range. The 50-day moving average is currently around $170. That's acting as immediate support. And resistance seems to be at that recent peak of $195.
What about other technical indicators? Are there any signals about its momentum? Is it running hot or cooling off?
Good question. The Relative Strength Index, the RSI, it's hovering between 65 and 72.
Okay.
Which indicates the stock is definitely bordering on overbought conditions. Suggests a lot of recent buying. We did see a bullish crossover on the MACD daily chart, which is usually positive, but that momentum appears to be flattening out a bit.
Plateauing maybe.
Could be. Volatility is also elevated. The options market is implying high volatility. It's in the top quartile for large-cap tech stocks. So the medium-term uptrend is still intact technically, but yeah, we're starting to see some signs of consolidation, maybe some exhaustion.
Interesting. And what about recent news? Any big headlines? What are analysts saying? And crucially, any insider moves?
Yeah, so August brought that positive news with the Q2 earnings beat and the raised full-year guidance. That was definitely a positive catalyst.
Right, you mentioned that.
And that led to two major brokers upgrading the stock to buy. They revised their price targets up to the $200, $210 range, specifically citing those AI tailwinds. Media outlets have also been highlighting the company's wins in these next-gen AI data center projects. So the story, the narrative, is strong.
Okay, positive news flow. What about that insider activity? That can often be a telling sign, right?
It can be. On August 18th, 2025, we saw multiple insiders sell to cover Form 4 filings. These came from the CEO and the COO. They sold a combined total of about 91,441 shares at a weighted average price around $183.
Selling. Okay. Is that concerning?
Well, it's important to note these were flagged as non-discretionary tax-related transactions. They were tied to RSU vesting restricted stock units.
Ah, so they had to sell to pay taxes on shares they received.
Exactly. It wasn't necessarily them deciding now's the time to cash out based on the stock price. It's often automatic. What's perhaps more notable is that there haven't been any discretionary or open market insider buys reported in recent months.
Right, so no execs putting their own cash in at these levels.
Correct. Overall social sentiment, online chatter, it's generally bullish. It's fueled by the AI excitement. But there's definitely elevated skepticism cropping up regarding the current valuation and, the sustainability of incredibly rapid growth. People are asking questions.
Okay, that makes sense. High growth, high valuation leads to debate. So looking ahead, what does this all mean for the future? What are the potential sparks, the catalysts that could move the stock? And conversely, what are the major hurdles it faces?
Let's look at the catalysts first. Short term, the next big one is really their Q3 2025 earnings. That's scheduled for late October. That report will give us crucial updates on AI sector demand, new customer wins. It could be a significant market mover. We're also expecting some new product announcements. There's a major semiconductor conference coming up in September that could generate some buzz.
Okay, and longer term, what could drive things beyond the next quarter or product cycle?
Longer term, potential inclusion in more major market indices like maybe the Nasdaq Q100 or the S&P Midcap 400, that could really drive institutional demand as index funds have to buy.
Right, forced buying.
Yeah. Also, expansion into network silicon for edge AI devices moving beyond just the data center and new partnerships with the hyperscalers, the really big cloud players. Those are significant potential drivers. Plus, just a broader adoption of AI accelerators across different industries, and any regulatory tailwinds that might favor U.S.-based chip firms. These are all potential positives if you connect it to the bigger picture.
That's definitely a lot of potential upside there. But of course, every investment has its risks. What should we be mindful of with Astrolabs, especially given that high valuation we keep coming back to?
This raises the important question of risk, absolutely. Firstly, that very high valuation multiple. It makes the stock extremely exposed to sharp corrections if future growth disappoints, even slightly. Expectations are just so high.
High bar to clear.
Very high. Secondly, there's customer concentration risk. Their largest 5 customers represent over 60% of their revenues.
60% from 5 customers. Wow.
Yeah, that's significant. It means they're heavily reliant on a few key relationships. Losing even one could really hurt. Then there's execution risk. Any delays in ramping up new products or any supply chain hiccups. Those could materially impact results. It's complex technology. And like any tech company, retaining key talent, protecting their intellectual property, those are ongoing business risks.
Okay, those are company specific. Are there broader market or sector risks we should consider too?
Absolutely. The semiconductor industry itself is inherently cyclical. It has booms and busts. That's always a risk. Regulatory risks, particularly from the ongoing U.S.-China technology disputes, could impact customer growth and market access for anyone in this space. And of course, broader macro risks. If we hit a recessionary environment, that could significantly reduce data center investment across the board, which would directly impact demand for Astera solutions.
Right. So a lot to weigh there. Bringing all these pieces together, then the strong fundamentals, that very high valuation, the technical signals, the future outlook, the risks. What's the overall investment thesis for Astera Labs right now? How do we sum this all up?
Well, our analysis gives Astera Labs an overall rating of 6.5 out of 10.
6.5.
Yeah.
That's it.
And the rationale is pretty clear, I think. The company truly stands out for its high revenue growth, its tech edge in a really crucial market, and that exceptionally clean balance sheet. Those are major positives. However, that current valuation is extremely elevated. Even when you compare it to other high-growth peers in the semiconductor space, it just seems like much of the good news is already reflected, maybe over-reflected in the stock price.
So a good company, but maybe not a great stock price at this exact moment. What's the actionable takeaway for potential investors who are looking at Astera Labs right now?
Yeah, I'd say the stock remains a high-risk, high-reward proposition at these levels. It seems best suited, perhaps, for short-term trading by more experienced investors. People looking to capitalize on that volatility around upcoming catalysts, like the earnings report or product news.
Right, playing the swings.
Exactly. For those considering a long-term investment, it looks less attractive at current levels, unless you have extremely high conviction in the company's ability to sustain that 30% plus annual growth, not just for a year or two, but over many, many years.
Which is a big ask.
It's a very big ask.
Yeah.
That's the kind of performance needed to eventually grow into this valuation.
Mm-hmm.
So for most long-term folks, maybe waiting for a more attractive entry point could be the more prudent approach, perhaps after a market pullback or after seeing more proof of that sustained super high growth.
There you have it, a really comprehensive look at Astera Labs, weighing those impressive strengths against what is clearly a demanding valuation. It's just a prime example of how even a fantastic company can present a really complex investment decision. Thank you for walking us through all that.
My pleasure.
And for you, the listener, the provocative thought we want to leave you with is this. In today's market, where you often see these incredible growth stories paired with, frankly, stratospheric valuations, what truly defines sustainable long-term value, and how much growth is really enough to justify paying, say, a 100% premium compared to peers or intrinsic value models? Something to think about. We really appreciate you tuning in. Until next time, keep learning, keep asking questions, and happy investing.